Hey guys, what's up? Welcome back to another week of preparation with me, Tremaine. You guys are back again for the weekly Forex analysis. Now guys, for today's analysis, we're going to get into four pairs: the DXY, AUDCAD, AUDJPY, and New Zealand dollar yen. Now we're going to start off with the DXY, and for the DXY, we're going to want to hop onto that daily. Now from a daily perspective, guys, what we can notice about the DXY is that the DXY is now at an important area of support, an area that is also a higher time frame weekly swing low. What we've been seeing, how price has been actually coming towards this area, was that price has been decelerating on the way towards this area. Now if we drop down to a H4, the H4, guys, what we will see is that this deceleration process started from these structural highs here. We see prices coming in with a corrective structure, blowing to the upside, blowing to the downside, and I guess dropping down lower. So we know that this corrective structure has started from those areas there. We also know that these are our weekly swing lows. Now, because we've been seeing some deceleration from the dollar index and beginning to see some structural breaks to the upside, guys, I'm going to want to look for some dollar strength. Now, how am I going to find an opportunity to trade and be able to buy into any dollar strength? What I will be waiting for, guys, is for price action to deliver me something that will give me a bullish bias or a potential to enter with a bullish bias. All I'm waiting for is I'm treating this as a range, and I'm going to apply my range probabilities for this market. So I'm gonna expect my buying probabilities to come in when I'm at the low of the range, and my selling probabilities to come in when I'm at the high of the range. So what I'm waiting for, guys, is for DXY to actually give me a setup. Even if we break below structural lows, if we break back above structure and start to trend to the upside, then I will be looking to trade any bullish continuation out of the dollar index. So I guess the dollar index is gonna require us to be a little bit patient to find a real direction in one, or I guess a satisfactory direction, though I would like to hold a bullish bias, just considering the descending nature of price action approaching a higher time frame support structure and then starting to show some signs of weakness. So all we are waiting for is for prices to give us bullish bias structure for that bullish entry. Let's go on to AUDCAD. On AUDCAD, guys, we'll hop up onto the daily. Now what we can see from a daily perspective is a market that has created a support structure, has pushed to the upside, and has then started pushing back down to that support structure. We see then again on the H4 markets beginning to decelerate towards this area of support. We see the nature of price action beginning to violate lower structure and break back above structure in a corrective manner. So what we will do, just for a measure of control, is imagine ourselves our descending structure. Whether the structure is an expanding structure, we can see that it is a descending structure. Now we'll look at the most recent price action, taking into account our highs and lows that were formed in the market, and we do see that these are previous structural lows that were violated to the downside, and we see prices breaking back within structure. Now we know from an H4 perspective that these are previous structural highs that are holding this market to the downside, and we know that these are our extreme structural highs on AUDCAD. Now what we will be looking for on AUDCAD, guys, is for price action to give us potential bullish entries. So we've had our impulsive move to the upside. We're waiting for AUDCAD to show us corrective price action back into support, and then we're looking to trade those bullish bias setups. We'll also have the confluence of trading this potential inverse head and shoulder structure that we do see there. We do also have new bullish momentum coming into this market. We also have our higher time frame support structure. We then have markets decelerating towards our support trend line, and on those higher time frames we have a nice beautiful 3-touch structure. Now there's a lot of reasons, or there's a lot of confluence, guys, that are pointing us in the bullish direction. All we need to do is wait for structure to give us that bullish entry. We could possibly get a daily double bottom structure. Regardless of how that structure comes, guys, we are looking for bullish bias price action. Let's go on to Aussie Yen, guys. On AUDJPY, what we will see is that we do have this ascending structure. Now, this ascending structure, as we spoke about last week, has the potential to create a 3-touch structure for us. If we look at order flow within this market and we get the general direction of this trend, we see markets creating lows, highs, lows, equal highs, equal lows, breaking to the upside, creating lower structure, and these are the previous lower structures that are, from a daily perspective, holding price action bullish. So from a daily perspective, guys, price action is bullish on AUDJPY. If we want to be trading into that bullish momentum, we know that we should be buying as low as possible. We should be buying into support structures. Now, just because of the nature of this structure, guys, we can see some bullish price action from this area to actually give us that third touch before we see the long-term sell. Now, if we drop down onto the H4, guys, we will begin to see some conflicting information. What we see on the H4 is prices coming from structural highs, creating lows, creating lower highs, creating lower lows, then creating equal highs, and now we are within these extreme lows and these extreme highs. If we look at this piece of information, we do see that these are previous resistance areas that are keeping this market on an H4 time frame, that are holding this market to the downside, or that are holding this market as a bearish bias market. As long as prices remain below this resistance area from a H4, prices could remain bearish. Now, do you see how we have conflicting information of order flow on our daily time frame and on our H4 time frame? Now, how are we going to approach AUDJPY over the course of next week? What I will be doing on AUDJPY, guys, is looking at my support structures, whether it's my trend lines or my horizontal support and resistance, and assuming that buying probabilities come in from support. So what I will be waiting for is for price action to give me a potential bullish setup from support, and then I will be looking to jump into any potential buys. However, I am also opening myself up to trading any H4 bearish momentum. So if we do see this market continuing to make its move to the upside and then giving us bearish bias structure at this resistance, that is where we will begin to look for our selling opportunities. So on AUDJPY, guys, we're going to be trading the structure that we see. If we see prices giving us some sort of an ascending structure, maybe you got that first touch, second touch, third touch, then we will look to sell this market. Or if we see prices pushing to the downside and giving us reversal structures violating structural highs, we will assume that prices are coming for this third touch, and we will open ourselves to any buying opportunities. That's our analysis for Aussie Yen, guys. Let's go on to New Zealand dollar yen. Now on AUDJPY, guys, we are opening ourselves up to trading the direction or the momentum in both directions, both bullish momentum and bearish momentum. Now on New Zealand dollar yen, things are just a little bit different, guys. What we are looking at here, we've obviously accommodated for most recent price action, so we've developed, or I guess we have a new potential 3-touch structure. What we do see is prices correcting to the upside, violating previous structural highs, and as well as these highs here, and then breaking back within structure. Now that's the hint for us. Prices correcting to resistance, correcting to a higher time frame resistance, violating that resistance, and then breaking back below structure. Now if we go down onto an H4, what we will see is a market that is extremely bullish in terms of the structure that we can identify on NZDJPY. NZDJPY is extremely bullish. These are the previous support structures that are holding this market to the upside. Now, if we want to be looking for bearish bias structure, obviously trading in opposition to the momentum that we are seeing on our higher time frames, we need to wait for price action to deliver us the structures. So looking at previous resistance that we've broken above, broken back below, we could be looking for prices to retest this resistance, give us a reversal structure at that resistance for the potential sell. We'll also pay attention to if prices do break above this resistance, are we correcting above resistance? Regardless of how price action will give us our bearish bias structures, we will be looking to trade only bearish bias price action on New Zealand dollar JPY. We could come up for that potential double top structure. We could come up for a retest of this previous resistance. Nonetheless, guys, I'm going to be looking for some downside continuation on New Zealand dollar JPY. What happens, guys, if this market decides to sell off from these areas here? If we sell off, then I will be looking for some potential continuation into previous resistance structures for a potential head and shoulder structure on our higher time frames. Guys, if we want to hold a bearish bias structure or bearish bias on any market, we will be able to eventually see structure that aligns within that bias. Just because we are bearish bias, we don't just jump into the market anywhere, anytime, because we assume that price action will be bearish. We wait for structures to confirm the direction that we are looking to trade. If anyone wanted to hold a bullish bias on New Zealand dollar yen, they would find areas of interest like these support structures and also find price action that supports their bias. So regardless of which direction you would want to hold in any market, guys, remember, we are human beings. We function based off something called a cognitive bias, and a cognitive bias is simply us imposing our biases on how we understand and interpret information that we see. If we want to hold a bullish bias in a market, we will see bullish bias price action. If we want to hold a bearish bias in a market, we will see bearish bias price action. And the way that we balance the two and make sure that we don't impose our cognitive biases on the market is we wait for the structures to complement our bias. Now, one super special tip for everyone that actually watched until the end, guys. Thank you guys so much. A super special tip for you guys is that you always want to understand the context of the market. If I'm seeing a structure that looks like this, am I expecting bearish price action? Maybe. It depends on the context. Do we have momentum coming in from the top? Do we have resistance that price is correcting towards? The context of the structures that develop, guys, really give us that edge, really allow us to combine our systematic approach with a discretionary execution process. So we systemize our approach of looking at the markets, and our execution is discretionary based on the context of what's going on. Now, thanks so much, guys, for watching until the end. I hope you guys received a ton of value from this analysis. I know you guys know which directions we're looking to trade over the course of next week. I hope you guys watch these setups, watch how they develop, watch whether they validate our forecasting or invalidate our forecasting. Regardless of whether a setup validates or invalidates your forecasting, that is still information that the market is giving you to be able to make that next trading decision. So guys, glad that you guys stayed with me to prepare for the next week. This is Tremaine, your FX Chasers mentor. I'll see you guys in the future videos. Have a profitable trading week. Be safe, guys. Cheers.